Welcome to Breakfast Club. John Hutchinson with Traders Reserve. Good deal to cover with you briefly for the week ahead, but we'll be doing this every day at 9 a.m. So you can join me. We'll have a pretty nice focus each day, either things that are happening, things that are affecting the markets, trade ideas, and more. So we all know the Supreme Court struck down the tariff that went into effect last April. That was expected. The reimposing of new tariffs, that was expected. So while markets may be down a bit here pre-market, I don't think Wall Street is surprised by any of the actions that have been taken. And regardless, it will still be months before there are any resolutions to whether these tariffs can be legally applied, collected, etc. So for the moment, my suggestion is ignore the tariff noise. That's all it is. And continue to focus on companies that have strong fundamentals, strong revenue and growth prospects, and strong economics behind the companies. So, excuse me, for the most part, that's still in the artificial intelligence realm. We will talk about a few things on the AI side today. The big news, obviously, coming up on Wednesday will be Nvidia's earnings. They report after the market close, and Nvidia consistently has been it's kind of a weird stock now. They're almost like a bellwether for artificial intelligence, even though the stock itself doesn't necessarily have the big moves that we're seeing from other companies reporting earnings. So don't be surprised if Nvidia will probably beat their earnings. They'll probably come out with big positive statements. But I wouldn't expect a huge move on Nvidia on Wednesday, maybe 3, 4, 5%, but it's so heavily traded, so widely followed that it's much more difficult for those stocks to have significant moves on the earnings report itself. They tend to take 30, call it 30 to 60 days to actually build a trend higher. And I do expect that with Nvidia. And their earnings are backloaded in the upcoming fiscal year, which means that their earnings are rising on sequential quarters. And that means owning Nvidia at its current level should result in owning a stock that ends the year significantly higher than it is beginning the year. We will take a look after Nvidia reports at what that actually entails for the stock. So Thursday's session, we'll be taking a look at the fundamentals and all of the metrics that I track and applying them to Nvidia to see what the potential is for owning that stock and the rest of this year. Still a good trading stock too. If you're selling options, they've been in a fairly tight range, and we'll take a look at some of that on Thursday as well. So a little preview of things to come. This was taken about an hour ago, a little snapshot, as I said. No big surprises here. Markets pulling back slightly. Maybe they go down at the open, maybe they'll bounce back. But again, everything that happened on Friday and over the weekend related to tariffs, largely expected, largely still priced in. The bigger news last week was really on the PCE front. That inflation continues to rise. And the PCE being the preferred metric for the Federal Reserve, makes it much more difficult for the Fed to justify rate cuts in the coming quarter or coming quarter to quarters. And the second big surprise last week was from the Federal Reserve meeting notes from the January meeting, in which rate hikes were suddenly discussed as potentially being needed to offset rising inflation. So that created a mixture of concern for Wall Street and uncertainty for Wall Street. You know, Wall Street hates uncertainty. So the bigger thing that I'm watching right now is the Bitcoin market. I'm not a crypto trader. I don't follow crypto in the micro trading sense, but I do follow it from a macro level, mainly because Over the last 10 years, it's been a significant investment for people. But Bitcoin falling below 65,000 recently, actually overnight, I guess it was, um, is a worrying sign. And one has to question whether people are cashing in, and why. And again, things that we'll take a look at in the future. But I would keep my eye on that, on just an eye. If you're not a trader in the crypto markets or in the alternative currency markets, if you prefer, uh, probably not going to have a major impact. But it is a concern. So overall, the last thing I'm watching are 10-year yields. If 10-year yields continue to rise up toward the 4.5% level, that will create a problem for the stock market, and especially in the small caps, especially in the tech markets. So that's the level that I'm watching. Anything above 4.4% is going to make me a little nervous. When we get there, I'll let you know. But for the moment, we just keep moving along with generally stable growth metrics. Employment has not changed, so the labor market is weaker but stable, and inflation still rising. Those are still the three cards that are being dealt on a regular basis that are going to impact where we trade, what we trade, and how we trade. The other major thing that I will watch, which happens later today, is Fed Governor Waller. He will be giving a speech, and he was one of the individuals under consideration for the chairmanship. So, and he is a voting member. So when he speaks, it is important because it is a look into a voting member's thoughts on the economy, on rate cuts, on rates where they are, et cetera. So it's not going to move the markets, but it does at least give some insight into the upcoming March meeting and at least one member's view on where rates should be or where they should be headed. Jobless claims Thursday. Again, what's really happening in the labor market? Rolling average has been elevated, meaning more people have lost jobs, but that's still well below historical levels. So not a source of point of concern. Not going to pull down the markets with recessionary worries or anything along those lines. But again, the biggest issue is inflation. It's got to stay below the 2.7 level. That's the level at which the Fed can justify further rate cuts without those rate cut expectations being met. I think we have headwinds in the stock market, and it's not a surprise that the major indices have largely been flat this year. They've pushed up, they've hit their big highs, and then pulled right back. You may be seeing, call it a slow roll correction, meaning the lows get lower, but the market keeps bouncing back. But not back to previous highs. And that's largely what we've seen in the NASDAQ, especially since I'm following tech heavily in the AI sector. That's something that I'm keeping my eye on. Where is the bottom? Where is the low? And where is the next high? We sort of aren't finding it or finding that level just yet. Last week across our services, Income Masters had a fairly good week, 7 out of 7 trades, over $1,600 collected. Average holding time about 14 days. The Avgo trade listed there, I believe that was an Income Madness Week trade, one of 2 trades on Broadcom that was operating. But the rest were all for you folks in Income Masters, pretty good week on the cash side, given that the market was a little volatile from Tuesday through Friday. And Millionaires Trading Club closing 3 trades. Little over $500, $550 cash collected, average hold about 6 days. So good week on the income side last week, and just stability in the market this week will help us out. On the AI2 portfolio, actually picked the absolute worst day to enter stocks given what took place on Wednesday. Having said that, the overall performance for the new, what did we add, 10 stocks? Still solid. 2 new 10% gains in Coherent and Sienna on the week. So that's from the Tuesday entry through the end of Friday. So look to bank gains on those if we get another run up in the market this week. And analog devices, ADI, reporting earnings last week, weird earnings day. Stock was up pre-markets, up at the open, sold off throughout the day, but not to a negative, not to the negative side. But I think their actual end of day was up about 2.3%, and then added some gains as the week went on. Lam Research, another winner so far. We have others. 7 out of 12 positions right now are positive. We have 5 that are in the red, but those reds average from about 0.25% to max of 5%, I think, on semiconductor, which is trailing right now. Micron's still our long-term winner, holding an 88% return since November. And AMD is still the redheaded stepchild. But I think we are reaching an inflection point on AMD. For those of you in AI2, I'll be talking about that a little bit later today. Adding a new segment to the AI2 Index called the AI Frontier. And the idea behind this is these are call it the very far future of artificial intelligence. So for investors with a longer time horizon, this is an excellent source inside the AI2 Index to mine for stocks where you may hold them for 3 to 5 years or longer. There's a reasonably healthy mixture of profitable to pre-profitable, even though pre-profitable means they have negative earnings. And even though that's essentially a 2-to-1 ratio of negative earnings to profitable earnings, it's the rate of change in those companies that have negative earnings that I am watching, and why I say I think that these are companies that have excellent long-term prospects, not necessarily or specifically the ones listed on your screen. This is just the flavor to give you the breakdown, which I'll cover in a second. But if you have a longer time horizon, you're buying, you have the potential to buy a company before the company's earnings turn profitable. That usually builds on itself. That's where you find those winners that double, triple, quintuple, etc. 39 stocks already assigned to the AI Frontier category. I'll be updating the AI2 Index a little bit later this morning. I just finished the research and segmentation this weekend. And some of the things that I really like about separating this out are, one, it gives us a different view on different types of companies in that where you can start to see what I'll call consumer creep. That means companies that are building into the consumer end of the market. That's autonomous vehicles, certainly robotics and drones. Quantum computing is very, very young as a potential trend. Those are very streaky stocks. They're excellent for short-term trading, even down to potentially day trading, but they tend to make big runs and then fall back heavily. And AI sensors and edge is an entirely new sector within artificial intelligence, which I will be working through more deeply as we go through these Breakfast Club briefings and the AI2 briefings in the future. But these are companies that are essentially building the future of artificial intelligence. It isn't here yet. This is like buying your airline ticket a year before you decide to take a trip. So, but overall, 39 companies, 12 of them are already profitable, 27 in the pre-profitable stage. You can see a number of the companies listed here. Many of these you may already know. We talked about Symbotic back in October during the AI2 seminar. IonQ, Rigetti, Qubit, Dave. There's another one in there. Anyway, multiple stocks in the quantum computing realm. Tesla, obviously a leader in autonomous driving, but there are multiple other companies that are building out in that autonomous vehicle, autonomous operation realm. So pretty exciting little sector and segment rather inside of artificial intelligence. So we now have the AI core or infrastructure, AI supply chain, AI-powered industries, AI solutions, and AI frontier. So 5 segments to artificial intelligence. Hopefully I don't have to keep growing more, but Stock that I want to bring to your attention today. This is a stock that I like for the longer term. The stock is Silicon Motion Technology, stock symbol SIMO. That's M as in Mary. This is a company that has very, very strong fundamentals, an excellent chart. Stock has been rising over time. I'm not throwing the chart in here today. We'll take a look at this again in the near future. Excuse me, but they're a leader in solid state devices. Revenue is growing at a high rate, over 24% annually. Their EPS growing over 40%. It's a big cap stock, large cap stock. So this is a company that has uh, the call it the supply chain power, because data centers need what they do, and anything that relates to memory or storage continues to be the two key areas inside of our artificial intelligence where stocks continue to rise and outperform because of demand. And demand right now still cannot be met. There are still backlogs in the development of future data centers, even to the level of space data centers. That's data centers in space. So this is still a growth industry or a growth sector within the industry, and it's kind of a stock that a lot of people don't pay attention to. It is a foreign company, but as I said, they have an excellent chart, and it's a stock that I'd like to have on people's radar. So here's your introduction to it. We'll talk more about it as we go through this week. Some others on my watch list right now: Fabrinet, really irritated by this company. We held it in the AI2 portfolio for the month of January. The stock had very wide range movement from about roughly the 500 level down to almost the 450 level, and just couldn't get the stock just couldn't get going. It had a huge recovery post earnings, had another huge recovery Friday, and now the stock is finally up 12%. That being said, this is a company that also has long-term growth prospects. Another one that I'll put in front of you now as a potential stock to own, and some targets there for you. Sorry, I had to run over a text there. So the entry anywhere below 545 is a reasonable entry. I may look to add it back into the AI2 index if we do get a pullback, but a target on that stock somewhere in the 650 range. Two other stocks to pay attention to: Monolithic Power, another stock that I'm looking at adding to our AI2 portfolio. The only thing that holds me back is it's a $1,200 stock. So I'm not a huge fan of super high priced stocks, because with limited capital, you can't get enough shares to benefit from a rise in prices. But that being said, still a stock that I want to pay attention to. And Taiwan Semiconductor, they are the backbone of all semiconductors in the world. And it's still a solid stock to own in a portfolio. They're not going to be the stock that runs up 10 or 20% in a single week. It's a stock that's going to grow over time. Very well managed and operated company, strong fundamentals, and they are in one of the primary segments of artificial intelligence, the AI core. So this is a company that I would also literally put in your Rolodex for a stock that you may want to own for a year, maybe 2 years. You should see a solid 20 to 30% return this year, with the potential to double that by next year. So again, closing out, keeping everything relatively short today. Tariff noise is real, but it's still fragile. I wouldn't worry about the tariff stuff. It'll impact the market, but I think that'll be brief. We'll get back to paying attention to what's really taking place in the economy, and what's really taking place in artificial intelligence. So we'll come back and look at Nvidia's earnings on Thursday after they report. Tomorrow we'll take another deeper dive into SEMO, Silicon Motion Technology. If you're not part of AI2 Insiders, if you'll want to be, we're doing exceptionally well. We're up over 15% for the year in 6 weeks. We have the AI Wealth Conference. If you don't have your seat, emails went out over the weekend. We'll have more today. Still seats available in Texas and virtually. So live trading all day Friday, and then all of the learning sessions on Saturday. So a simple, focused conference. And although I'm talking about artificial intelligence largely, does not preclude us from talking about other stocks, number one. But AI is the driving force right now. The markets are moving based on AI excitement, AI enthusiasm, AI scares, AI worries. Even last week, and I'll dig this up for tomorrow, but a number of Wall Street analysts began to push back on the extreme negativity surrounding artificial intelligence, especially as it relates to margins, return on investments, and the capital expenditures, all the money that's being spent on build out for artificial intelligence. So when Wall Street analysts begin to push back on what's being reported more broadly or more widely in the media, that is something to pay attention to because they do not usually speak up. It's not as if it's not like they have to be right, but when they do speak up, it's worth listening and listening to what they say. And that's why I'll be bringing some of the commentary to you so you can get a better sense of why what they're saying matters and how what they're saying is actually playing out in the earnings from a broad number of companies that we follow in the AI2 Index. Not every stock had a great earnings season, but a number did. A number of stocks have moved. And again, that focus on semiconductors, chips, memories, storage, the supply chain to artificial intelligence. We'll be walking through all of that performance in the AI2 briefing later today. So that's your breakfast club for today. See if we have any any limit to virtual seats for IBL. Yeah, we do have a limit of 100. That's the size of our Zoom room, Joe, but we're not close to the limit right now. If we get close, I'll send everybody the panic email that says reserve your seat now. But virtual seats should be available throughout the next couple of weeks. I'll be paying more attention to the seats in the room in Dallas and keeping an eye on that level more so than anything else. So plenty of seats on the virtual side. But I will be starting up a few little bonus things in March for IBL to get some work done in advance of the conference. But you're seeing some of that here anyway. But it'll still be part of the conference pre-conference agenda. I just haven't put that out yet, and we'll be doing so later this week. Thanks for the question. About a year ago, you mentioned Sezzle, followed ever since. What are your thoughts on it today? I don't know. Great question. Let's take a look at Sezzle. SEZL. Give me a second. I'll switch my screen over. Looks like a flat stock. And hang on a moment. Switch my share. And so let's take a look at Sezzle here. Under the 200-day moving average. Yeah, let's take a look at their financials. I want their annuals. So rising earnings over the next 3 years. Let's do a quick calc on that. Oh, I didn't want that screen up. Excuse me. So from current levels, calc in the way. Go out to the 2027, 552. So you have a 27% earnings growth rate from 2026 to 2027. So let's write that in here, right? So this from here to here, 27%. That's very strong, assuming that they're hitting their numbers. The one limitation here, not widely followed on the analyst side, so that may be holding the stock back a little bit, but it's not a deal killer by any stretch. Take a look on the quarterly side and see what their performance is like. They're outperforming their earnings by a lot. They are still reporting Q4 on Wednesday, and bouncing earnings. This is what you want to pay attention to. See the earnings go up, come back down, come back up. That may be one of the things holding the stock back. In other words, they're not getting this kind of earnings growth over here. This is inconsistent earnings growth. It'll start there. Let me clear that. Get out of the way. Thank you. Gap earnings strong. Again, they're beating on the gap side. This is, to me, this is the more important number. But again, why is the Q2 down? And that may just be a function of the company not being widely followed. The other issue, short term, relatively slow rise to no rise in their revenue. Even though, again, they're beating revenue pretty consistently, a low of 4%, a high of 62. So this is where the slowdown in the stock right now is. You're not seeing a more defined increase in their earnings in the near term quarters. Man, sorry, Zoom is giving me trouble this morning, but that's every day. Let's take a look at shorts. Shorts are pretty low. Short interest only running at 4, but 25%. Actually, I'm sorry, it's high. 25% short float. So you can see there's pretty wide, calling it 26%. If we look at options for a quick second, we go out. Yeah, March 20 is fine. Go out to that's all they have, are monthlies. So we'll go out to the monthly. Some market, just free market, so no action there. Guys, go out to April for a second. So all of the put action is at 55. I don't see anything closer than that. If we look back here, yeah. So right now, what I would say on Sezzle is the shorts are playing to get this back down to around this level, probably this 49.50 level. Stock is not oversold, so it's trendless right now. And I would say that Wall Street is waiting. Right? It's flirting with its 50-day moving average. You have all of the primary, outside of the 200-day, you have all of your other moving averages. Oh, let's go to the big boy chart. Sorry. Right. So 20, 10, all below the 50 right now, but they were above, they were bouncing above. I think it's just a quiet stock right now. Whatever happened here, they beat earnings, they beat revenue. Wall Street didn't like something there from their August reporting period. I'd have to go back and look that up to find out why the stock gapped down. If I told you a year ago, we wind the clock back, March. So where is the right March? April, May, Feb, March. Oh, here. So I was right for a little while, right? I was right from here to there. But obviously something happened here on this earnings report, which I'd have to go dig up to find out why the stock dropped. That's a huge drop. And that could have been anything from changing forward revenue expectations, margin expectations, to earnings expectations declining. I got to get back out of the full screen here. You still see EPS growth strong. Cheap stock. I mean, trading at 14 times forward earnings. So you'd have to ask yourself, what exactly are the shorts looking for here? And it may be that there was a change in forward revenue expectations or some other external event that I don't know about right now that would handle that. You can see institutional ownership is low. It's there, 40%. But I'd rather see institutional somewhere around 50 to 70%. So yeah, that's my review. If you're playing with the stock, I would keep my eye on probably $40 as a bottom. But thank you. Option premium, so like trading it, huge run up, and like to see that again this year. You might be waiting a little bit on another run up, but if they do run up, I would set a target line somewhere around 80. Right, there's clear resistance. Right, prior support back here, August, September, October, and now it's the resistance line into early 2026. Oh, I got to go back to this chart. That makes it a little clearer. So Yeah, really 75. 75 is your resistance line right now. So if you can, that's still, if you're playing, whether on an option or uh, even on the stock side, a 10%, 10, 12% move over short periods, kind of did it right here. That was a bottom. What was the low? Open, we'll call it 58.70 and a close there. 67. I mean, that's a $9 move. So it can make these little not gap, excuse me, impulse moves here, there. There was a nice strong one there. But yeah, I think you have to have a quick exit trigger. And I mean, this was a nice solid move back at the end of last year, and it petered out. So, I mean, it's a stock to own and short. You just have to be on the right side each time. But if you're playing with options, yeah, I mean, 75 on the high. Right now, I'd say 50 is clearly a solid low based on that turn. And even carrying 50 back to prior gap up here in May of, I think that's 2025. Yeah, May of 2025. So yeah, there you go. That still a tradable stock. My concern owning it would be what happened back here in August and why that changed the trajectory of the stock. You're welcome. Like to see it run again for you too. Okay, that'll wrap up Breakfast Club for today. I'll see you again tomorrow morning at 9 a.m. And if you are in AI2 Insiders, I will see you this afternoon at 4 p.m. Thanks, everybody. Have a great trading week and see you again tomorrow.